got EQT, which is another one of my picks for earnings. Tuesday after close, this one's showing a bit of a Wyckoff reaccumulation type of chart. EQT is a energy, minerals, and integrated oil company. Did just get a adjustment on its price target by TD Cowen up to 68 from 60, so it's right under 60 at this point. The thing on stacks, as you can see, there's a couple of these puts that were sold at 51 and 45. Like Max said, these can be considered walls that are considered support at this point. On the other side of it too, though, if you just filter for the buys, just last week we do have these 8.15 and 8.1 $60 and $61 strikes. So these are definitely a little bit shorter term. Like we said, for EN, PH, and phase, those ones are more of a longer term play for January of 2026. They've got multiple months on this one, on that one. On this one for EQT, this is very short term. This is within the next 2 weeks, 3 weeks, if anything. Okay. The thing that you have to understand is, yeah, the first two, 92K, 97K, not exactly the biggest amount of premium, but this one, 309K for 3,000 contracts at 1.03. That one kind of intrigues me. And the thing that I want to point out here is the chart. I'll make sure you guys can see all of that. Cool. This is a Wyckoff reaccumulation chart. It is when price continues to go up after it's accumulated near the bottom. And you can see that there is quite a few similarities in terms of the chart and in terms of where certain resistance and supports are being found. You've got a preliminary supply down low, little small one with a buying climax and a shakeout, or you can also consider the odd end where they rebuy and they buy up more of the shares up to an automatic reaction. From there, you see a secondary test area, and after that, you'll see a lot of chop below what we call the creek, and from there, a bounce back up and a jump across the creek before we see a last point of supply and eventually some more signs of strength. So here, it's very possible we had a small sign of strength here. I don't think it's the biggest one, but there's a possibility if we break up above these highs that we've most recently seen, we could see another sign of strength, another last point of supply before it blasts off even further. So the thing is, I do think with what Stacks is showing, and obviously we got to wait till Monday, see if there's continued purchasing, if there's additional buying of it. But no, like Max has said too, this guy didn't get in with $309,000 expecting to lose that premium within 2 weeks. So yeah. EQT, there's a more of a bullish sentiment for earnings. I love it when it goes and aligns up with what I have to show you guys in terms of a Wyckoff chart. Keep in mind though, Wyckoff doesn't have to play out exactly that way. Wyckoff tends to be a long-term play and a long-term big picture situation. But it's also when we see Stacks showing us that that confluence, the confirmation through other people and the big money putting their money where their mouth is. Those are the situations that give you a higher probability on those types of earnings plays. Did you do EQT earlier? Yeah, here we go.
Yep. So for EPS, we're expecting between 45 and 46 cents, which is up 675% year over year. That's pretty crazy. Revenue, we're expecting 1.18 billion, which is up 53% year over year. The EPS trend, it's been revised up 0.13% in the last 30 days. But earnings ESP, here's our warning sign, down 3.27%, another bearish signal. Zach's rank gave it a number 3, which is a hold. It's had big beats in the last 4 quarters, but no edge in the models this time. The setup, explosive potential, but high risk. So what's driving the quarter? Natural gas prices are back, baby. Henry Hub average prices in Q2 are up massively year over year. In April, we saw 342 versus 160. May 312 versus 212, and June 302 versus 254. That's fuel for EQT, especially with less than 50% of output hedged. Big upside or a big whiplash. I think there's more upside though because they had the Olympus acquisition. That's a volume bump. But yes, volumes went up, but integration and transition costs are still chewing into those margins. So that's one thing we need to be aware of. We also have the Appalachian pipeline bottlenecks, which is giving them limited leverage. Even with better gas prices, EQT's stuck with regional constraints. It can't fully sell into higher price downstream markets yet. Now let's talk about our bull and bear case for these guys. The bull case, gas prices are up 90% year over year. Revenues expected up 53%, four straight EPS beats, production expanding via Olympus, and a low hedge equals high torque to price upside. Now, the bear case with them is EPS estimated was revised down recently. ESP is negative, which equals no beat signal sometimes. Pipeline constraints limit the upside here, and integration costs will likely pressure margins. The spot price volatility finally can bite down or bite onto the downside. And our final word is EQT is the largest U.S. natural gas producer, and the wind is finally at their back. But this isn't a clean setup. Pipeline limitations, low hedge coverage, and acquisition noise all add risk here. High expectations plus high exposure equals a wide earnings range of things that could happen with them. So watch the tone of the call after the forward price commentary and margins that they report like a hawk. Now, our poll for them, are they long and gassy? Are you going to hedge your bets? Do we have a short squeeze incoming? Because that is a lot of times. This is also a setup for a short squeeze to happen, and we see some crazy runs post earnings dip. Like, because if it sells off, there could be a squeeze in place since there aren't a ton of shorts open on it right now that make the price just explode at a certain level. Don't know what that level would be. And finally, for all of those who want to sit on your cash, no thanks, you'll be sitting this one out.
Yeah, I like the chart. That's how I'm looking at it. I like the way the chart looks. There is a risk to the downside. If I show you guys here, the chart up here, where this LPS is, last point of supply, it can chop around here for quite some time. So there's a possibility we could see this drop back toward, I would probably say toward this like $55, $53 range. That could be very possible if we see a negative earnings report. We don't see them meeting the expectations as much. But you also have to consider it is at these all-time highs for the chart. And a lot of times when you do get to those higher ends, you might end up seeing it squeeze upwards as well. The Wyckoff chart, and also I would even say is if you look over at what Stacks had to say, that open or that the short-term calls that we're seeing in terms of this company, I would say give it a higher potential for an upside play for earnings than downside. Now, again, if on Monday we end up seeing a bunch of puts being taken, we see those calls sold off right before earnings, then that would definitely change my expectation for it. But as of right now, looking at the chart, hearing what Max had to say in terms of how great this company is doing, I could definitely see it run up in terms of their earnings on Tuesday.
Also, on a technical level, they've been able to reclaim and stay above their slowest EMA at 56.02. So that's always a good sign because even if it loses it, it's all on the 4-hour chart that I'm looking at. Anytime it's lost that level, it's quickly gained it back. So even if, again, we see a sell-off with them, it's going to be temporary. Now, granted, temporary is like, it could be like a week. But again, if you buy time, and that sometime is the best play. If you're uncertain, you can buy just more time on your contracts and buy a further out strike to wait for that recovery potentially. Because if anything, that's just an opportunity for you to average down. So I like this chart though. I think I might play some calls this week to see what happens.
Yeah, I'll be looking into that on Monday. When market opens, we'll keep an eye out for that one. All right. Man, I love it.